Today we are going to take a short break from our credit card series to talk about investing. Investing in this stock market. What's the current situation in the stock market? Why is it dropping so much? Why are people losing money in the stock market? Should you start investing if you have not done so? And if you are already investing, should you sell out your holdings? We'll find out now. Hello, Calebby here. Today we are going to talk about investing because backed by popular demand, there's some comments asking for investing videos. So this video would cut right in the middle of our entire credit card series. Next week we will carry on with our credit card series, after which we'll see how it goes. If recently you have been following the news and watching other people talk about the stock market, or if you yourself have already been investing in the stock market and you realize that your holdings have recently dropped a lot, do not worry. It's a normal market fluctuation. Normal in the sense it happens every few years. Remember, there's a quote that says the market is uncertain. We will never know what happens to the market today, tomorrow, 2 months down the road, 3 months down the road, or maybe even 2-3 years down the road. But there's one thing that we know for sure, for certain, is that the market will fluctuate. That's the only constant that we can rely on, that the market will fluctuate. So what happened in theory at least, or what happened from what I believe, is in 2019, the stock market, especially of the US and most other different stock markets, so US, the Euro stock market, Hong Kong stock market, have been rising pretty fast, or in what we usually like to call bull run, where the market keeps going up and up and up. Even when there's bad news, it keeps going up. So the lowest dip, I believe, from last year, it was, I will see if I can get some screenshots here, but the lowest dips that I've seen from 2019 was probably in July, June period, and then from then on it started to keep rising. Every few weeks it will keep increasing and increasing and increasing. Then it crossed the end of the year at a very, very positive note, where a lot of people who have invested their money into the stock market in 2019 have seen huge gains. Almost everything that they have placed their money into have grown tremendously. Then the fortunate or unfortunate thing is, in January it still keeps on rising and rising. The prices of stocks in general keeps increasing and increasing all the way to February. Nothing from the end of January was when we started to see more and more news about the COVID-19 virus. Back then it was just called the Wuhan virus or the novel coronavirus. Currently we have already named it the COVID-19. So initially when news of this outbreak came out, the stock market was still doing pretty well. It was in fact rising still all the way until around the mid of February, where they started to have some panic selling, and then it kept on dropping. But initially it fluctuated a bit before it continues dropping and dropping. So in the last 2 weeks, I believe, it was dropping all the way. So almost every single day it was dropping. I think the 3 largest points drop that we have in the Dow Jones Industrial Average was in just the last week alone. The reason for the market to drop so much is because it has been on a bull run for a very long time, so it was due for a correction. But the problem is that this correction came only when people begin to panic about this outbreak. So as businesses begin to be shut down and earnings have been reported not to be able to be hit, as more and more places are on lockdown and some economy or regional economies start to be in the standstill. Like initially it was just in the China region, Wuhan region was in lockdown, but now in South Korea, in Italy, they are also in lockdown. So a lot of businesses will be affected, thereby bringing down expectation of many different companies. And also because China was and is an important factor in the whole supply chain globally for the global economy. So a lot of things that we buy are made in China, and because of the entire shutdown or slowdown, then it gets harder and harder for the economy to run, the entire global economy. And then as more and more places got locked down, more and more businesses are affected. So all these many different factors begin to weigh down on the stock market. So the expected correction actually dipped further and further, and we are not sure when it will stop. I mean, nobody can time the market perfectly. So in summary, you can say that there's many different factors. If you want to put the most important factor, it will be this COVID-19 outbreak, which has brought down the stock market. So during this period, I also have friends who are texting or calling me, but my phone is always on silent mode, so it's always missed call to ask about the stock market, what's happening, what should they do. I'm no pro. But before we move on with the video, we'll insert this joke of the day. Who received the first call in history? Is it Alexander Graham Bell? No. It was way before him. I'm not sure who's the exact guy. I know that that fella would likely be a butcher of animals, because he's the one with beef and pork collar. Alright, now the rest of this video will be slightly more serious. So the stock market as a whole in general is simple yet still complex. Simple in such a way that if you purchase good publicly listed companies that can consistently make more and more money, have low to zero debt, are able to have a competitive advantage over their peers, then more than likely the stock market can close for the next 5, 10, 20 years and you will still be able to make money from ownership of the shares in that company. Why do I say that? Because in order to start investing in companies, you would have to look into their financials, look into their management, look into the different news that are out there. So you must also do your own filtering of the news. So there's a lot to do if you are investing in individual stocks. What about investing in index funds? So for index funds, similar to a stock market, because different indexes tracks different stock markets. So like the S&P 500, the Dow Jones Industrial Average and the Nasdaq. So all of these track the US stock market, or they try their best to track it as close as possible. Like when we shared in the earlier part of video, and I believe you would also agree, is that nobody can predict the stock market, what it would do in the next few days, in the next few months, cannot time the market. But one thing that we know for certain is over time, over duration of 20, 30 years, 40, 50 years, the stock market will increase over time higher than inflation, which means if you put your money at any point in time into the stock market, even if you are putting it in at a peak and it drops a lot, over time, if you are not forced to sell, it will come back to the same level and then more. Now, the only problem with the stock market is, since it is very easy to get into, a lot of people would be able to buy different stocks of different companies pretty easily without doing too much research or reading up on the different companies that they are buying into. Maybe they started to own a Samsung phone and they would believe, oh, Samsung, this company is a good company, they go and buy a share of the company, not knowing the financials or the fundamentals of the stock that they are buying, the ownership of that company, not knowing if it is overvalued or undervalued. Remember that any stock at a certain price would be a bargain. So that's the entire problem with the stock market currently. Now we move on to point number 2. Should you start investing in the stock market if you have not done so, or if you have cash lying around? For me personally, yes, I think you should, but this is my own opinion. I do not know if the market will keep falling tomorrow, the next few days, the next few weeks, the next few months. What I do know is that I have been buying into the market at the discounted prices for the stocks that I want to own, and I will also still consistently keep buying more and more shares of the companies that I want to own at the discounted price. So I'm not sure if it will keep falling. It might drop maybe another 30-40% in the next few days, even though we have already dropped, it was 19% from the peak. So why do I say it's a discount? You have to keep reminding yourself that the shares represent an ownership, a part ownership of the different companies that they are representing. So imagine if we use a simple company. Let's say this company has one vending machine. This vending machine that's selling 10 cans of drink a day, and every can is $1. So every day this vending machine would generate $10 in revenue, and then simplify the cost, we take it as 50 cents. So you'll make back 50 cents for every drink, which is $5 every single day. Now if someone were to come along and ask you if you would like to buy this vending machine company from him, this entire company only has one vending machine, he has no debt, and he wants to sell it to you for $100 today, you might consider. But if tomorrow he comes along and he asks if you want to buy it for $50, there is a higher chance that you would go ahead and buy it because of the 50% drop in price. So this is similar to what is happening in the stock market. People are selling companies that they are holding on to for a cheaper price. The reason is because, like the whole chunk that I shared earlier, because a lot of companies are affected, a lot of businesses are affected, economies are affected, supply chains are affected. So in a sense, you can imagine that this vending machine company would be selling, instead of selling 10 cans of drink a day, it would only be selling 1 to 2 cans, which would mean that the profits and the revenue would drop drastically. Therefore, the owner's intention to sell it off first. If you are doing value investing, you would take a look into the company. So for this company's example, the vending machine company has no debt, which means that they do not need to pay off any interest, even though their earnings or revenues decreased, which is a good thing, because by buying it very cheap, over time as the outbreak gets contained, hopefully you would still be owning a full 100% of this vending machine company at a 50% discount. So once everything gets back on track, it would still be earning $10 every single day in revenue by selling 10 cans of drink every day. So like I say, the panic selling are caused by uncertainties. People do not know what the future will hold for every single one of us in this whole situation. So it could be ending up like the previous SARS, Ebola cases, where it just die off and gets contained, or it could be like the Black Death situation, where 1/3 of the entire population vanished. So we are not the expert, we can't tell how it will end, but I know that over time, if you buy companies at a discount, you would do pretty well. And actually, that's how the big monies are made in the different deep cycles. When the market is rising, you can buy into the market and make a few bucks. But when there's a dips and corrections or recessions similar to what we are experiencing right now, it's a good time to make our buku bucks. So in summary, if you have not invested into the stock market, I would suggest you reading up different companies. Look for companies that have low debt and were growing initially before this entire thing, because I'm pretty sure that most companies would be affected somehow or other by this whole situation. You could also look into companies that might not be as affected, maybe some gaming companies where when people are staying at home using their computers, they will be making money for those companies. So internet-based companies. So as long as you're investing in companies that have consistent growth, competitive advantage, low to zero debt, high cash reserves, then you probably do not need to worry about the company closing down, because the probability would be very low. There's always a possibility for anything to happen, but the probability will be very slim. So now the last part, should you be selling out of your holdings that you have currently owned? So if you have been buying consistently over the past few years, your holdings would hopefully still be in the green. If you have been buying and selling and buying shares in the last few months, maybe in December, in January, in February, then probably you would see many rates in your account, and you'll be thinking, oh man, should I sell it out? If I sell it out tomorrow, it will drop again and I can buy back. Now nobody knows for sure, because the stock market is like that. So in order to not let the emotions get in the way, you would have to look at the holdings that you are holding on in the long-term outlook. So in 5 or 10 years time, would that company still be around? How much would their shares be worth? So all this, you would have to do your own research on their fundamentals, their financials, to know for certain or to a high probability of success. Also do take note that because the Federal Reserve of the United States have also dropped or slashed their interest rate by half. Previously it was 1%, now it's half percentage point, which means that during this period it's actually easier for companies to borrow cheaper money to tide them over things. But I would still advise looking for companies with high cash holdings so that they can tide over the whole situation and come out stronger. Hope this video helps some of you out there who are concerned about the whole situation or thinking about investing in the stock market, or concerns about holding on to their stock in this whole situation. So I would believe that in the next few weeks and months, most likely than not, the stock market will still keep on dropping, but 2, 3, 5 years down the road, we will be looking at this situation, and if you have held on to your stock and even buying more and more stocks, you would be pretty happy, I suppose. So if you're new to the channel, feel free to subscribe down below, comment on any questions you have, or any feedback, any encouragement you want to give every single one of us, or any advice you have backed by certain data. You can also post the different data's link down and we would take a look at it. So that's all we have for you. Thank you for watching. See you guys next time.